In today's video, we are going to look at what are the different questions which are generally used while facing the investment banking interview, or the top 25 questions related to investment banking projects related with software testing. So first mostly asked question is what is meant by investment banking. So investment banking is nothing but it's a financial institute which generally helps any individuals, corporates or government to raise the capital. Means if you want to, if you are having your own company and if you want to raise a capital, then you can, the investment banks are the some who can help you to raise the capital by guiding you how to come into the market and how to sell the IPO, or how to go to the primary market, then how to sell the shares in the secondary market. For all that, the guidance is given from the, or help is given from the investment bank. So the next is what is the main role of investment banking. The role of investment banking is it firstly assists the any person or individual or corporate or any government to raise the capital. Then second main role is it useful, or it helps for merge and acquisition. Means if two companies want to merge for gaining the profit, at the time this investment banking will guide you how to merge. And for acquisition means if you are a owner of one company and you want to acquire the another company, if you want to own the second company, then they will help you to, for the process and to decide the value of company, like that. Also this investment banks helps for the selling the IPO. Means if you want to raise a capital and first time when you are coming to the market, then at that time they will help you for IPO selling as well. So they will provide a trading application. So different trading applications nowadays are available in the market. So these trading applications are also provided by most of the time investment banking. Then the next main question is what is meant by merge and acquisition, as this is the most important role of investment banking. So merge is nothing but when two companies are joining together for gaining a more profit, is nothing but the merge. Means what, if two companies and if when two companies are approximately having a same size, okay, with both the companies are in same, we can say same field they are working. For example, one company is related with the clothing brand and second company is also related with the clothing brand, and both are having the same size, means employees are same, or we can say the profits are same. And when they want to merge, at that time, uh, this means separately owning, instead of that they will merge together, they will combinedly do their business, is nothing but the merge. And acquisition means what, one company is take over the another company, it is nothing but the acquisition. So means if you have one company and you want to buy second company, means you are going to take over the second company, is nothing but the acquisition process. Next is the what is meant by capital market. Capital market is place where savings and investments are get exchanged or channelized. Here means what, here the investors will invest their monies and buy the different shares or bonds or mutual fund, is nothing but the capital market. So what are the different types of capital market? There are two types of capital market. First is a primary market and second is a secondary market. So primary market is, means what, here when any company comes in the market for first time, means it is also called as a new issue market, then they will launch their IPO. So in primary market is nothing but here trading is done between company and investors. And in secondary market what happen, here old securities are channelized. Means whatever the shares you have bought from the IPO, right? These all shares are now get exchanged in the secondary market. So it is described as a, here the old securities are get exchanged between the investors. So here you cannot directly deal with the company, as in IPO or in primary market you deal with the company, but here you can deal with the different investors. Some want to buy the shares, some want to sell the shares. So this trading is takes place in the secondary market. Then the next important question is what is mean by IPO. IPO is nothing but an initial public offering. So here the different growing companies means, for example, you are owning one company and you want to raise the capital, then you can launch your IPO with the help of investment banking. Investment banking will help you for the prospect building or how to launch a IPO, what will be the suitable date for launching the IPO. So these all kind of help you get from the investment banking. So once you launch your IPO for first time, it will come into the primary market, and on the given date and given the time, that IPO get available to the public, and some investors will purchase that particular IPO. So there are some, we can say, it is having some price which is decided for a lot, means you cannot buy a single shares over here, you have to buy the lot of a share, means generally the, for example, one lot is having a 10 share or 10 quantity, then you have to buy that full lot, at least one lot you have to buy, is nothing but the IPO. So in short, you can keep in mind the IPO is nothing but an initial public offering when any company make it available for the public for first time is called as a IPO. Then the next main important question is what is issue price? The issue price is also called as a offer price. So here a new securities or any share sales for the first time, means in IPO it is selling for the first time to a public or investors, so that decided price is known as a issue price. Then the next question is what is mean by trading? So trading is nothing but, we can say, the selling and buying of the share is nothing but a trading. So what happens in trading generally? In trading, some peoples will exchange the cash and exchange cash and securities are done. Means what? Buyers are buying the shares and sellers are sharing selling the shares. So the exchange of cash and the securities are done in the trading. So the next main question is what are the types of securities or asset? So the different types of securities are like shares or the stocks, then bonds, mutual fund, commodities, currencies, derivatives like forward, future derivative, option derivative, and swap are the different types of securities, assets, or instrument. Then the main important question mostly asked is what is mean by stock, or what is mean by share, or what is mean by equity. So all these terms are equal. I have made a separate video on what is mean by share, stock, and equity. I will give a link on this I button, please go and check. Also I will give a link in the description box, please go through it for the detailed information. So share is nothing but it's a unit of ownership, means for example, if company is selling its shares, right, so that much amount of ownership you are having on the equal proportion of company's capital, means if they will get a profit, you will get a returns according to that. If they will get into a loss, you will lose that much amount of money. So in short, keep in mind a shares is nothing but a unit of ownership to the particular company. Then the main question is what are the different types of share? So there are different types of share. The first one is a common share, which is also known as a ordinary share, and second share is a preference share. So what is meant by ordinary share? Ordinary share means it's a normal share. Mostly the shareholders or the investors will invest mostly in this common share. So what happens in common share? Here the common share will buy some shares or invest their money and buy the common shares. They are having the voting right, and if the company is getting some profit, then you will get a returns in that percentage only. If they will get into a loss, you will lose your money, or the market value get decreased according to that percentage only. And what is meant by preference share? Here in preference share, the investors will get a fixed amount of returns for their money, means even if company is in loss, they will get a that much amount of returns or what is decided according to that. Means they will, and if company is getting more profit, then also they will get a fixed interest or fixed amount on their invested money. But for preference share stockholders don't have the voting rights. Then the main question is, what is bond and what is what are the different types of bond? So generally bonds are nothing but the debt instruments which are issued by the companies to raise the capital. So there are different bonds like a corporate bonds, government bonds, municipal bond. So what is meant by municipal bond? Municipal bond is debt or security which is issued by the municipality for for raising the capital. Okay, so if you have purchased the municipal bonds, then you will get exemption for some federal taxes, for local taxes, like that. So they generally raise a capital, or they required a capital for construction of highway or bridge, or say any we can say municipality related work. They want some money at that time, they will offer a municipal bonds. Then the second is government bond. Means what? Government bond is a debt security which is issued by a government to support a government spending or to raise a capital for government. So this can uh, these bonds can pay periodically, and interest payment is also known as a coupon payment. So generally the government bonds are issued by the national government. So the next is the corporate bonds. Bonds means what? The corporate bonds are issued by the companies to raise the capital. Like companies, instead of taking the bank loan, they will offer you a corporate bond, and from that they will raise the money. So what is the benefit of this corporate bond? These bonds are issued in order to raise the capital. So the reasons will be like, they if they want to merge any particular company, or they want to acquire some company, or if they want to expand the business, at that time these corporate bonds are issued. So here they will offer you some interest rate according to your investment. Then the next question is, what is mean by mutual funds? So mutual funds are nothing but it's an entity that collect the money from investors and invest into some various financial instruments like shares, bonds, etc. So means what? Instead of buying shares directly, you can invest that particular money to a particular company. Then they will invest again that money to buy some shares or some commodities or any security type, and returns you a profit according to that, or money according to that. So there are generally two ways of investment money into mutual funds. First one is you can directly invest, or otherwise you can invest the money on behalf of banking. So these mutual funds are generally a pool of money collect from the many investment investors and give it to one particular company, or and they will buy the securities like shares, stocks, etc. So these mutual funds are generally operated by some professional people, so who are having the very good knowledge of market. So this is nothing but the mutual fund. Then main important concept is, what is mean by SIP? SIP is nothing but a systematic investment planning. So systematic investment planning means what? SIP is systematic investment planning. Means it allows to invest a small amount of money on specific period of time. Means instead of investing a lot of money at the same time, you can invest a fixed amount of money every periodically. Means for on monthly basis, for example, you are investing a 200 rupees, right, to into a mutual fund. And so that particular mutual fund will give you a returns according to that. So SIP is having a some period, and on regular interval you have to pay the money, or you have to pay your whatever will be a amount on periodically basis. So generally this SIP investment is having a periods like weekly, monthly, quarterly, etc. So SIP is useful for small investors or which want to invest the money into a regular basis. Then the main important question is what is meant by commodity and its type. So commodity market is a physical market, or we can say it's a virtual marketplace where you can buy or sell the raw or primary product. So what is meant by raw and primary product? So there are different types of commodities like hard commodities and soft commodity. So hard commodity means what? It include the natural resources like gold, rubber, or anything which comes under the hard type, so you can buy it virtually. And soft commodities means what? It generally include the agriculture related products like wheat, sugar, coffee, etc. So there are lot of ways to invest the you invest money into commodities. So there are some future contracts or the obligations which comes under this, we can say, commodities. Because for example you are investing into agriculture product into a soft market, then there are the chances of getting a more profit or less profit depending on the future perspective. You never know how much value it will return you on which agricultural product you have invested. So this is nothing but the commodities. So there are different types of players in the commodity market like commercials means what? These entities involves in the production, or we can say for buying and selling of the commodities. So for example, one person who is producing a, we can say, raw material and selling it on a commercial basis as well. For example, any farmer is taking a product of tomatoes and selling its tomato ketchup. So this is nothing but the commercials, means they will involve into production as well. They are processing it and also selling the product. Then the large sculptures means these are the group of investors which will, there are some money managers, they can take a decision of the investments, where to invest, where not to invest. Then small sculptures means what? There are some individuals or the persons who trade on own account, means they will take its own decisions, no one is involved there. It's nothing but the different players of the commodity market. Then the next main question is what is meant by currency market. So currency market, it include the foreign currency market or euro currency market. So here there are no any central physical location for the currency market. So here the currency market is where borrowing and the lending of currencies takes place. So interest rate for various currencies are set up by the market. So here the trading of foreign exchange market is established on the rate of exchange of currency. So it include the markets like forex market, means what? Forex market is a way of currency exchange. So you can exchange your currency in the pairs. Then through the forex signal you can easily manage the forex trading. Then the comex market is there. So in comex market, commodity market are having an extraordinary position. Here this market offers you excellent opportunities for investment, or they will give you a high level of returns. So this market offers a wide area, like you can trade here the gold trading, silver trading, or oil, crude oil trading you can done in this comex market. Then the main important type is the stock market. So in stock market you can exchange the cash and security, right? Means buying and selling of the shares is done in the stock market. Then the main important question is what are the different product type. So what is, first we'll look at what are the different order type. Order type is nothing but when you want to order, or when you want to buy a share. So what are the different types of order you can place? So first order is a market order. Market order means what? If I want to buy a share of any company named as a ABC, then whatever will be the market price, I am going to buy the share, and that market price is known as a market order. Means you if I want to buy a 10 shares and now the price is 100 rupees, then I will buy the 10 shares on 100 rupees only. Then limit order means what? If I want to buy a 10 shares, but I don't want it for 100 rupees, I want it for 98 rupees, then I will put that particular limit as a 98, and when market comes for that particular share up to 98, my order get placed is nothing but a limit order. Then the next important type is sell limit order. So sell limit order means what? If I want to sell my shares, if I am holding a 10 shares and I want to sell it for 150 rupees, then I will give a limit of 150, and when market goes up to a 150, my order get executed and it get automatically sold, and that much amount is credited into my account. Then stop loss order means what? If I want to sell my shares for 150 rupees, but suddenly what happened? Market is getting down, 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 and I'm getting a very much loss. At that time, to avoid this kind of situation, I will select option of stop loss order. Means what? I want to sell my share for 150 rupees, but if market is coming down after 120, means then I will set my limit as 120. Means if I get the 150 is good, but if market is coming to down, it will automatically get sold for 120 rupees. Means I cannot bear the more loss than that. Then the most important time is FOC, that is fill or kill. Fill or kill means what? If I want to buy a 10 shares and in market if there are only 9 shares are available, then it will directly kill my order. If 10 shares are available, it will fulfill my order, because most of the time what happens, the number of sellers means the sellers who are selling the shares, they don't have that much amount of shares available. So I want the 10 number of shares, if it is available, the whole order is get placed, otherwise whole order is get killed. Then the immediate or cancel means what? IOC is the next type, where I demanded for the 50 quantity, right? So if it is available, I will get it immediately. Otherwise, it that particular order is get cancelled. Means I am not going to wait for a availability of that much amount of shares. Then the most important question is what is mean by product type. So product type, there are different product type. Like first is the MIS, that is margin intraday square off. So what is mean by margin intraday square off? The margin intraday is nothing but within the day. Means within that day, whatever the shares you have buy, at the end of day or whatever the timing of your share market, it will get sold automatically, is nothing but the margin intraday square off. And second type is the CNC order. CNC is cash and carry order. Means if you have invested money and if you have buy the share, you can keep it, you can buy the shares and keep with you for long days. Means whatever the days or whatever the duration you want, you can keep that shares with you, is nothing but the cash and carry. So these are the two types of the product type. Then the main question is what is mean by stock exchange. So it is a, we can say, market where trading is done. Means exchange of cash and securities are done in the stock exchange. So stock exchange will trade, or trading is happened in the stock exchange. So there are different stock exchanges are used to raise the capital, right? So the like NSE, BSE are the some stock exchange examples. So next question is what is mean by portfolio. So portfolio is nothing but, we can say, the portfolio is having your company, means if you are having one company owned by you, then the portfolio is a collection of financial investments like stocks, bonds, or commodity, cash, etc. Is nothing but it's a positions and the holdings. So the position shows the profit and loss or details of current date, and holdings will show you a profit and loss details of previous day. Is nothing but the portfolio. Then the next question is, what is meant by derivatives? So derivative is nothing but it's one kind of contract used by the financial market. So it itself a contract between two or more parties, and here the price is determined by function a for underlying asset. So there are different types of derivatives. So forward contract, swap contract, future contract, optional contract. These are the types of derivatives. So we'll look at what is meant by option and its type. So options are the financial derivatives that gives a buyer to write but not the obligation to buy or sell the asset. Means what? For example, uh, there are two types like call and put. So what is meant by call and put? Here in call, user will predict the share price will increase in the future, and he will invest into a call option. And input, where user can predict the share price will decrease in the future, is decided into a put. Means here generally in option you can guess the price of particular share or security, and according to that you will trade. Then what is meant by premium value? The premium value is nothing but a minimum value, which is also called as a current market price of the share. Then what is meant by future? Future is a financial contract that obligate the party to perform transaction on a asset in predefined future date and price. So there are two types, that is long and short. So in long what happen? Here this user can think the share price will increase in the future, and in short user can think that the share price will decrease in the future. Is nothing but the price prediction for the future. Then what is meant by trade date and settlement date? Trade date is nothing but a date where buyer order is executed in the market, and in settlement date the date when transfer of share is done between buyers and share. So these are the different questions which are generally asked in the interview related to investment banking for software testing interviews or manual testing interview. So please do like to our channel, subscribe, do comment, and please check all other links in description box. Also go on the I button and check the playlist related to different videos we have made. Thank you.